Well, despite the fact that we're entering now in a very mature phases of the economic cycle, both in the US and in the euro area, a very mature phases also in terms of monetary policy cycle, still we have questions about the evolution of core inflation, and that is critically important. In the US, we are pretty confident that core inflation will follow the path of headline inflation and will converge towards the objective of the Fed in terms of price stability, 2% as a target. That is not the same picture in the euro area, and that is a key element. As of today, there is no more hike priced in the market. For the ECB, it's a question mark. In the euro area, we have a genuine wage price spiral, which doesn't exist in the US, where every increase in wages is translated in one-to-one as an increase in unit labor cost. It's due in particular to the fact that productivity gains are negative in the euro area. So it means that we are exposed to a potentially upward surprise on core inflation that is not really priced in today. So it's a kind of fragility of for fixed income markets in the euro area, and probably we'll have to be a bit patient to build a constructive exposure here. We believe that at current level, the US fixed income market is quite compelling. After significant correction we experience, in particular on the front end of the curve, the first cut of the Fed is now positioned mid-2024. We are fine with that. I know on whatever the likelihood potentially of an additional hike, 20 basis points by the Fed, that's what really matters to investors. The Fed will be on hold and will cut due to the fact that the US economy will enter a recession. There's a debate about the magnitude of this recession. Are we talking about a shallow or something more severe? Our scenario is much more, on a shallow recession. At current levels, US fixed income is very attractive. We like, in particular, the short end of the curve, which is extremely protective, and the belly of the curve. We're in the process to implement steepeners on the US curve, so short end and the belly. Indeed, fixed income is back. That's the very good news. We have to be patient here and there because we have a kind of desynchronization, in terms of monetary policy tightening cycle. As you said, the US is already investable for investors. That is our strong conviction. We have to be a bit more patient in the euro area, but we are not so far, to have strong buying signals in this market.